Hello, George DeSantis here with the look at the market for the week ending July 7th, 2017. We'll read the disclaimer as we usually do before we do anything else. Trading and investing has large potential rewards and large potential risks. This video presentation is designed for educational purposes only and is not a solicitation or advice to buy or sell any securities or other tradable instruments. You must be aware of the risks and be willing to accept them in order to invest in the markets. So consult a licensed professional investment advisor for investment advice, since I am not one. Let's begin by looking at some charts on the S&P, the weekly chart first, as we usually do. So here's a weekly chart of the S&P 500. And first of all, we should note that the market is still in an uptrend on the weekly chart because the 4 is above the 9 moving average and the 9 is above the 30. So the market, according to the configuration of the moving averages, the market is in an uptrend on the weekly chart. And as you know, our friend Alex says, we make our strategic decisions based on the weekly chart. If you don't own a stock or if you don't own the index and you want to know whether you should own it or not, a good place to start is to ask the question, what is the weekly chart doing? So right now it's trending up. Uh, First caveat, or something to be guarded about, is that this doji, the last candlestick, hit the parabolic. It's quite possible this thing will go lower and maybe we'll get to 2350, but it's holding quite stubbornly at 2400. And it's been consolidating above 2400 all since the month of June, all throughout the month of June. Now we do on the bullish side, we do have a bullish harami because the body of this bar is totally engulfed by the body of this bar. So that's a bullish harami. So we have some mixed signals here, as we often do. We still have that bearish divergence of MACD. See that big bearish divergence we saw some time ago, weeks ago? And we still have that. It seems to be playing itself out here. So it's quite possible this thing will go lower. I haven't really bought up a whole lot of stocks that I said I would probably buy up again because I'm still concerned about this weekly divergence here, the divergence on the weekly chart of MACD. Now on the bullish side, RSI 12 is above 60%. When that happens, you can have some confidence in the uptrend. And Williams percent R is still above that 20% line. Chaikin money flow has been decreasing here. And the CCI on the weekly chart is still positive. When CCI is above zero, the trend is up. So let's take a look at a daily chart. So this is a daily chart of the S&P 500. What we are seeing here in terms of the trend lines that we look at is a flip. It's a reverse of what we saw on the weekly chart. Since the 4 crossed below the 9 and 9 below 30, somewhere around here, it remains like that. This is the 30 weighted moving average, the 9 exponential moving average, and the 4 exponential moving average. In addition to that, the parabolic is continuing to remain above the most recent bar. This bar is bullish. On Friday we had a green bar. So we opened here and we closed here, we closed higher than we opened, which is a good sign. Right now the MACD histogram is trending up a bit. It trended up a bit on Friday, but it's still in bearish territory below the zero line. Now, if you look at RSI 12, we usually use this on the weekly chart because it's on the weekly chart that I read the research on this. And although we do it on the weekly chart mostly, we can see that it crossed above the 40% line on the daily chart. And that's encouraging. Williams percent R spiked down here and spiked up on Friday. And Chaikin money flow, as we saw on the weekly chart, has been decreasing here. CCI on the daily chart, though, is bearish. It's in bearish territory. So it's telling us that it's supporting the idea of the downtrend here. So what we have is a bullish weekly chart, a bearish daily chart. So the typical struggle here. We're looking to see whether this 2400 level here will continue to hold as support. And if it does, well, we go higher from here. I am not committing a lot more money to this market yet. So let's take a look at something else. Let's take a look at the stock charts. .com charts showing us the impulse indicator, Alex Elder's impulse indicator. And what we have here is a weekly chart of the S&P. Now you can see this trend line here, which is the 9, okay, the 30 and the 50, okay. So this is the 50 moving average, the 30 weighted moving, and the 9. Now 9 is above 30, trend is up. You can see we have blue bars. Blue bars indicate that we can either go long or short. We could buy or sell. So we're at a critical juncture here. Now, if we look below here, we'll see that we still have that basic big divergence of MACD, and that's what is concerning. And so that's really what we have to be concerned about. Now, let's look at the daily chart. On the daily chart, we get, of course, a different picture. We also have a blue bar as of Friday. Notice that prices went all the way up and then pulled back within the buy zone between the 9 and the 30, even between the 30 and the 50-day moving average. So notice when we get to this juncture here, market took off. When we got to that juncture here, market took off again. Likewise, somewhat here. And so when this market seems to be looking for a support level here at 2400, and so we'll see what happens. Let's take a look below. The Williams % spiked all the way down. What happened in previous spikes? Well, when it spiked down here, the market took off. The market hit a bottom and took off again. And likewise on this spike here and this spike here. What I have found is that the Williams % is almost a carbon copy of Alex's force index, the 13-period force index or 13-day force index on the daily chart. So this is encouraging from a bullish standpoint. It appears that from a bullish standpoint, we are finding support here. We are in the buy zone here. The weekly chart remember the weekly chart looked pretty bullish, and so there are signs of strength here, except for that bullish divergence on MACD on the weekly chart. So let's look at something else. So a quick summary on the S&P 500 as a measure of the general market. We can say that the weekly trend is still up, showing some signs of vulnerability because of that bearish divergence of MACD, that purple line. You can see the divergence. What do we look for to feel a little more confident that we can start buying that I can start buying some more stocks here? I want to see MACD trend up again and especially break above the zero line. If I see that, I will begin to become more positive on the market. So I'm looking for a bottoming process here. And until that happens, I'm going to be very cautious. So let's look at some individual stocks. We've been following a few of them. In looking at the individual stocks, I'm going to do something different this week. So I'm going to use Best Choice and also Dr. Ayler's StockSpotter.com website. So let's start off by looking at XLK. XLK is this chart here, and that's the ETF of the technology sector, or at least one ETF. And you can see it's very oversold. And whenever it gets to this oversold region, we usually get a rally. Okay, so that's one thing I want to point out. Now, let's take a look at what Dr. Ayler's And just quickly, if you're not familiar with Dr. John Ayler's work, you can go to his website, stockspotter.com, and see what he has to say there. He's a physicist, worked in the space program. He's really a space doctor, if you wish. And he has done a lot of work with cycle analysis. And so here's a chart of XLK. And what it's showing here is that you have a swing setup was spotted at Friday's close. This indicates a possible near-term bullish upswing. Possible, okay? No guarantees here. But these mark the bottom of the cycle, you see? And usually when you get these here, not in every instance, and when the momentum drops below, then you get an upswing. So right now it's set up here for possible upswing on technology sector. So let's take a look at some individual stocks. First, we look at Apple. This is on the extreme chart, and you can see that Apple is oversold. Almost the same configuration of XLK. And let's take a look at John Ayler's chart. And here you see that we have a swing setup. It was spotted at Friday's close, indicates a possible near-term bullish upswing. No guarantees, but it's pretty good, damn reliable. Okay, so let's take a look at another one. Here's Facebook. Facebook, very narrow channel, and it's now oversold. It has been oversold. And we had a nice bullish bar here on Friday. So we have that sort of oversold setup again. Let's go to Ayler's swing. And here we have a swing setup on Facebook also. So I suggest you take a look at StockSpotter. It's a really good website. Some of it is free. The premiums you pay for. I take a look once in a while at the free areas here, technical indicators and the screeners. Let's look at something else. Here's NVIDIA. Now NVIDIA, of course, had this huge run up here, and in fact for the whole year, last year, and then it pulled back to the 50% line. So now it's trending up a little. Let's take a look at John Ayler's chart. So NVIDIA is also showing us a possible swing setup, and 2 days ago, in fact, and it's in the same boat as all the other ones we've looked at. Another one. Here's Microsoft. I guess by now you're getting the picture. All these stocks that we've looked at and some more are oversold and starting to look as though they're finding a bottom and starting to trend up. I'm getting more inclined to want to start buying some of these stocks. And let's look at John Ayler's chart on it. And here's a swing chart on possible swing setup on Microsoft. And like clockwork, you got another possible swing setup here with the possible price move. You see, it's a range between about 71.90 and 69 or something like that. So let's look at another one. Here's Netflix. Same story. Oversold below the 10% line and ticking up on Friday. And if we stop this now and we go over to Ayler's, well, what do you know? Same swing setup. Folks, I've been looking at John Ayler's charts here for a couple of years now. In fact, he's the guy that sold me in 2000 the Mesa indicator with the instantaneous trend line that I used to use on the other program, Supercharts. And I've never seen so many setups, possible swing setups at the same time. And in this case, it looks very, very interesting to me. So I can't tell you, I'm going to be looking seriously at buying some stocks this coming week. Doesn't mean you should go out and do it because I don't know your situation. I don't know what your financial situation is. So I'm just showing you what I'm looking at, and you can make your own decisions, which you should. So I'm going to bring this to an end here because we're running out of time. But this is very interesting. I hope to you, it was to me, and I hope it is to you. And maybe it will help you to make some sensible, profitable decisions, as I hope it makes me some money as well. Okay, have a nice Sunday. We'll try to do this again next week.